In this video, I'm going to show you exactly how to start and scale a business funding company in 2025. This is a full-length business funding course completely for free. And this is the exact process that I've used to fund over $40 million to small and medium-sized businesses through my company, Waiters Capital, and help countless students build their own 6- and 7-figure funding companies. Like Wale, who built a $40K a month funding business in 60 days, and Alex, who went from a 9-to-5 to $20K a month with his funding business. And we can't forget about Matt, who I helped scale to $200K months, run his funding company full time. This isn't going to be your basic how to make money online video. I'm going to be showing you exactly how I built a legitimate business funding business so you can easily earn $10,000 to $200,000 a month in commissions while helping business owners access the capital they desperately need. This video will show you the exact step-by-step process you need to follow so you never have to watch another video on business funding again. I'm going to be covering the dual funding model that sets you apart from competitors, business formation and legal requirements, marketing strategies that actually work, complete fulfillment process and funding strategies, banking relationships and credit optimization, how to structure deals for maximum commission, literally everything you need, the exact blueprint to build your funding empire so you can achieve financial freedom and impact. What's going on, guys? Super excited to have you here. It's that time. It's going to be a lot of information that we're going to cover that can help you guys get to the next level, right? A lot of this information and stuff that I put together, people have paid me for, and I'm giving it to you guys right here in this presentation. So make sure we lock in. Let's go ahead and get started. My name is Stedman Waiters. Everybody calls me Stead. I'm better known on Instagram as Stead.Waiters. I'm the CEO of Waiters Capital, a business funding company, and I'm also a business coach. What do I coach? I show people how to start, go, and scale their own funding company. Been in business for about 4.5 years now and been doing this for about 3 years full time. I don't have a fairy tale story. I was working in corporate America as an engineer, wanted to figure out how to get into entrepreneurship, transition over, and now I'm doing this full time, right? I helped over 50 students hit 6 figures running their own funding company as a business loan broker. And I've helped one student cross that 7-figure mark, right? You got to understand, in this space, we're selling money, which is one of the best things because money is always going to be in demand, right? And based on the models, when I talk about them, you'll see that it's not hard to actually get active in this space and have success as long as you implement the strategies that we're going to talk about, right? So let's get straight to it. My company is Waiters Capital. We funded over $40 million to small and medium-sized businesses. We offer startup funding, revenue-based lending, equipment financing, SBAs, business term loans, and business lines of credit as well. Now we're going to go over to the business model. Before we go over the business models, I just want to clarify a few things, right? So we are essentially business loan brokers, right? I know there's different industry, different spaces, and some people look at the funder or a funding company as the one actually directly lending the money. That's not necessarily what we're doing. It's just different terminologies depending on what space you are, right? So we are business loan brokers, and what does that mean is we market to find people interested in capital, business owners or startups, right? And we connect them with lenders. We close the deal and we get paid for it, right? So essentially we're selling money. With a business funding company, you're helping entrepreneurs get access to capital. And there's 2 models that we're going to cover that I recommend you guys to implement. So the first model is going to be traditional lending, right? Traditional lending is essentially credit card stacking. This is best for clients that may have good credit but no revenue at all, right? So they're going to be more so traditional lending. With traditional lending, credit card stacking, you're going to be going to major banks like a Chase, like a Wells Fargo, like a Truist to be able to get them 0% interest funding, right? The beauty about this is based on the strategies we'll cover today, you'll be able to get people high limit approvals and better approvals and more approvals than they would themselves. And that's how we earn our 10% commission, right? So the structure of traditional lending, like I mentioned, is you earn 10% commission of the total amount funded. Meaning if you go and get somebody $100,000, they would pay you $10,000 in commission once funded, right? So this model is more so for performance based, but it's a very, very lucrative model because you don't have to work with many people in the month to make a decent amount of money, right? Alternative lending is something that's helped me really, really build my business up, right? Alternative lending is going to be revenue-based lending and is catered towards more established business owners, right? They can have as low as a 500 credit score. As long as they're making $8,000 or more in monthly business revenue, they can potentially secure some capital, right? The beauty about alternative lending is you can earn up to 15% commission of the total amount funded, or in that space, they call it points, 15 points, right? The commission is paid by the lender, so you don't have to charge the client anything. And to give you guys a real life example, let's say I got you $100,000 through alternative lending. Typically 5 business days, once the deal has been funded, that lender will wire me my commission, which would be 15 points, equal to $15,000, right? And then last but not least, and this, what's in red right now is limited to only alternative lending. You have something called renewals in this space, right? Where renewals is basically a way to continue to get paid passively through deals you funded in the past. And I'll break it down to what I mean. If you get somebody, let's say $100,000, once they're 45% paid in, they're now eligible for a renewal to get more capital if they're eligible for it, right? And if that happens, you're usually paid again based on the amount funded, right? Every lender has their different dynamic structure when it comes to renewal payouts, but it's another way to get paid again off the same client by building your book of business and renewing people. And those are usually the easiest, sweetest deals ever. Usually takes one phone call, collecting most recent business bank statements, and getting the deal funded, right? Quick break. If you've been thinking about starting your own business funding company, this is for you. I host a free live workshop where I walk you through the exact system I've used to fund over $40 million to small and medium-sized businesses. And my students, they're turning this into a 5 and even 6-figure a month business. If you want to learn step-by-step how to do it too, click this link below and register for my free funding workshop. Seats fill up fast, so grab yours now. I'll see you live. So now that we went over the models, I want to transition over to talk more about the different type of lending in more detail in the products they offer. So like I mentioned with traditional lending, with this, you typically just need a good credit score and no revenue, I would say, right? And we're going to break down what an actual good credit profile looks like, because it's not always about the score itself, it's about the credit profile. Different products that are offered in traditional lending will be 0% interest credit card stacking, like I mentioned earlier, getting people in a sequential order the amount of 0% interest they need, which can go up to $150K. Personal loans as well, business lines of credit and business loans. And like I mentioned, it depends on the client you have. Like traditional lending can help with those with no revenue and a good credit score, or it can help with clients that have a good credit score and revenue as well. With alternative lending, this is more so going to be private money, right? So product types for alternative lending consist of merchant cash advances, which is an MCA, which is a sale of future receivables, right? So to kind of simplify what this term means, they get 4 months of business bank statements to evaluate cash flow, and they give you offers based on projected, revenue coming in the future, right? So they're purchasing your future receivables. Revenue-based lending is pretty quick. It can be lended up in 24 to 48 hours. The payment structure on these most of the time are going to be daily or weekly. You're rarely going to see monthly, but I have seen it before, right? Minimum credit score needed for alternative lending is a 500, and minimum monthly revenue is about 8,000. This is a great product, especially for business owners that have a lower credit score, that have a cash flowing business, simply because traditional banks won't fund you. Like if you have a 500, 550, you're not going to be able to walk into your local credit union or any major bank and get any type of funding because you don't fit into their credit box. But on the alternative lending side, the private money side, you can get funded all day as long as you're in the right industry and you have the revenue to back that up, right? So here's some other products, like I said, in the alternative lending space. You have business term loans. I would say minimum score is 650, 20K, minimum revenue 20K when it comes down to it, to look for that. And those usually be weekly and monthly terms, right? Then we have business lines of credit. Business lines of credit, typically minimum credit score is around 640. They want to see about 15K a month in minimum revenue. This can be quick as well, and they have weekly and monthly payments. The tricky thing about lines of credit, when you're funding people lines of credit, as a broker, you're not going to make much on the front end, right? Your payments or your commission is paid out as that client withdraws, and it's usually around like 2 to 3 points, just depending on where you're getting the line of credit from. So just understand that a line of credit can be used to make money, but more so just provide a solution for a business owner to build a relationship and later close them on another deal, right? And then we have equipment financing, right? Equipment financing is revenue and collateral based. They usually have better rates, I would say, than an MCA. And then you can have weekly or monthly payment terms when it comes down to those. So here's the daily funding framework that will separate you from the competition, right? A lot of you may come and say, yo, I'm trying to start my company, I'm a broker, and I want to separate the competition, right? If you want to leave your competition in the dust, you want to understand this right here, right? Most brokers only offer one path, meaning that if you're in the traditional credit card stacking space, you only focus on credit card stacking. Anybody that falls outside of having a good credit score, you can't help them, right? And then in the alternative lending space, right? MCAs, different things like that. They're just focused on MCAs, meaning that if you don't have any revenue, they don't want to talk to you, right? And I've seen both of these spaces not really understand each other as an industry, and I decided to offer both, and it's been a game changer for me. Why? It's because now you have more to offer a client, right? If a client doesn't fit into one box, they get turned away. But when you offer both, you're able to recruit more and close more deals on both sides. So I highly recommend offering both to be able to maximize how many clients you can serve, which ultimately will lead you to making more money, right? Then I want to talk about the advantage. I kind of went over that a little bit. But like I mentioned, traditional lending helps people with strong credit and no revenue. You can get them up to $150K with 0% interest. Alternative lending is a ideal solution for those that have challenged credit but consistent revenue, or somebody that may need funding the next 24 to 48 hours. That does happen, where people will take money even though it's more expensive because they need it right away, right? And like I mentioned, you can serve both markets instead of just one. That means more clients say yes, more ways to generate commission, right? And you become the go-to funding resource because you always have a solution. Remember, the more you offer, the more money you can make, the more people you can help. So here's a commission breakdown of what both sides looks like when you get down to it, right? So on the traditional side, like I said, with that, you're able to get people funded up to $150K and 0% interest. When that happens, they pay you a commission, right? So in this one deal right here, I know I'm blocking it, but we got this client $132,000 in funding. We made $13,000 in commission off of this. They left us a testimonial, and we were able to fund this person $70,000, which gave us $7K in commission, right? They left us a testimonial as well. On the alternative lending side, it's a little bit different. It's a sales aspect to it, and we'll get into that later, where basically you're submitting their file to lenders. Lenders are giving you back the offers. You choose the best offers, and then you close the deal. Once the deal is closed, typically about 5 to 7 business days later, you're going to receive a wire with your commission, right? So this is a deal that we closed, 51K, which paid 15 points, and then 115K, which paid 14 points as well. So you want to determine your target audience, right? You want to determine your target audience when in both of these niches, right? For traditional lending, you want to target more so startups, typically people that have no revenue, and it takes a little bit better understanding of credit if you want to be in this space. Meaning that it's not as simple as, hey, they have revenue, we can get them some money. It's understanding comparables, utilization, late payments. You want to be more in tune with understanding credit profiles when offering this, because that's going to make or break how much fun you can get somebody. And we'll talk about that later today as well, right? With alternative lending, is for more established business owners, right? So even if they have bad credit, but they have revenue, you're still able to help them, right? And then you have quick underwriting and funding, meaning that literally if everything makes sense, you can get them funded the same day or even next day. It's very, very quick, right? So these are the two niches that you want to understand when it comes down to it, and find your target audience within both. So now you want to go to business formation. I want to show you guys how to actually start your business. Now that I kind of explained the business models, right? So first and foremost, you want to choose a business name. Here's why I recommend. You don't have to do it, but this is what I recommend. First and foremost, you want to check your Secretary of State to make sure the name that you choose is actually available. So whatever state you're in, you can literally type on Google that Secretary of State. You can type in the business name you're looking for, and if it doesn't pop up, that means it's probably available and you can use it. In my experience, what I would tell you guys to do is avoid high-risk names. Like, don't use credit, don't use funding, don't use financial in your name. The reason why, if you're looking to secure funding for yourself to grow this business, you're going to be limited on the amount of funding you can get from banks, simply because you're going to be categorized as a high-risk industry. So I wouldn't use those type of things in my business name. If you want to use AI to help you come up with a creative business name, you can always use namelicks.com, as I'm showing here, right? When it comes to a business phone number, having an 800 or a local number can work various ways. We have both when it comes down to it. So you can have either or. Numbers are typically inside of your CRM, and we'll talk about CRMs later. CRM is a customer relationship manager. For branding, let's say you want to come up with a logo, website, different things like that, you can use a resource called Fiverr. Fiverr.com. You guys can go search it up. There's a ton of freelancers that can help you create your logo, any type of branding, any type of inspiration you need when it comes to the creative part of forming your business. And then for your business address, if you're getting a brick and mortar, you can avoid this. You can just use your brick and mortar address. Let's say you're starting off as a solo broker. You're going to have a home office. You'll be doing this from the house. What I wouldn't recommend is getting a PO box or UPS box, right? Because those are usually flagged, especially when you go to banks to try to secure funding for yourself to start this business. So I would would not recommend those. You can use virtual addresses. I don't like the popular ones like Regis and Opus. A lot of those get flagged as well. I would typically try to find one close to wherever you're located, or smaller ones like an Alliance or something like that. That usually helps as well, right? As you continue to go on, you want to start off by getting the right social media accounts, right? You don't have to create every social media account in the world. And this is more so understanding and being in business and really realizing which social media accounts are the most beneficial when it comes to this business, right? So LinkedIn is a really, really good beneficial account. You can create your own personal profile and an actual business account for your business as well. So I highly recommend creating a LinkedIn because there can be a lot of business sent through there. And if you want to use LinkedIn Sales Navigator, that can be a great way to secure leads. And we'll talk about that a little bit later. You want a Google business page that creates credibility and trust online, especially when you're marketing to a cold market. Let's say if people don't know you, the first thing people think of is a scam. So doing a quick Google search, they can see that you're an actual company, can sometimes alleviate and help you get that deal closed, right? YouTube is another really, really good one. YouTube is a great platform that I recommend you guys to be on, especially if you're personal branding, talking about funding yourself as a solo broker. YouTube can be a great way to secure clients. I do it all the time. And then Instagram as well, right? Instagram is another really, really good one. I recommend creating an Instagram profile for your business to be able to market that effectively. And these are typically the places where we get a lot of leads from, right? For business websites, you can use ScaleApe. ScaleApe is a CRM built for business loan brokering, right? Or you can pay somebody on Fiverr to get that created. So either or, you can use one of those platforms to get your business website done. When it comes to business email, I like using an actual business email. What do I mean? Shouldn't say at Gmail. It should show at your business name. So to give you guys an example, deals@Waiters Capital can be a great email that you guys can use. Just make sure the domain, the ending part of it has your business name to come off as professional as possible. And you can get that from Outlook as well, right? So legal licensing and considerations, I'm going to kind of go through this to kind of help you guys out, to help you understand a lot of this, right? So first and foremost, for credit card stacking, you don't really have to have a license to operate when you're doing credit card stacking like traditional lending. This is more so for alternative lending, revenue-based lending, alternative finance, whatever you want to call it, right? So states that require a license, it's California, Vermont, and small other ones. It's very, if any, really states that really require a license to offer funding, right? But I know for sure California is one of those that require a broker license to operate. Other states allow you to work as a consultant without a license. Always check your state-specific laws before operating. That can be a quick Google search, ChatGPT, just to see where you're at and ask, do you need a license to actually be in compliance, right? And just some compliant basis, what every broker should know. Always be transparent. That's the biggest thing, especially in the alternative lending space. Be transparent about, rates, terms, and fees. Protect client data, right? Remember that we're dealing with a lot of, data. So we want to make sure we handle it with care, follow privacy and security best practices, and just stay updated in regulations. Regulations can change at any time. So it's going to be very, very important that you stay up to date with your regulations to making sure you're doing everything the right way when it comes down to it. And remember, commercial lending is not regulated like mortgage or consumer lending spaces, right? There's way less regulations. You don't have to have a bunch of certifications, not a lot that you have to do compared to these other industries. So I don't want you to look at it as that, right? So here's a good tech stack, right? Tech stack is basically the technologies, software that you'll need to really run and have success in this business. So first you want to get a CRM, right? If you don't know what a CRM is a customer relationship manager. It'll be your command center. This is where literally all your leads will go to, how you track your leads, how you contact them, how you send out text blasts, email, like everything you need will be in this one system. This is your database. This will be your home. Your sales reps can clock in, take calls from this. So this is a very, very important part. This would be the heart of your business, right? Helps you, like I mentioned, to track leads, deal flows, follow up, client history. Some great resources to be able to get, like I said, a CRM, it's ScaleApe, Go High Level, HubSpot, and Salesforce, right? Quick tip to automate. You want to automate reminders, texts, and emails so no lead slips through. If you're a solo broker, if you have more people under your team, then, it can be a little bit more manual. And if you're looking to cold call, let's say you're doing a lot of cold calling, cold outreach, and different things like that. If you want a dollar, you can use Wave, Ring Central, or Kixie, right? When it comes down to contracts needed, right? Once, let's say you get a client, the next thing is to get them on the contract. If it's a credit card stacking for your 10%, or if it's alternative lending, you want to send them a business application, right? You want to have some plug and play templates ready to go. So client agreements, like I mentioned, would be contracts of them agreeing to the 10%. If it's credit card stacking, business applications, like I mentioned, when it comes down to it, will be more so alternative lending, where you're collecting their information and 4 months of business bank statements to submit, right? If you're going to be doing affiliate and partnerships, I highly recommend getting agreements so everybody's on the same page. It may be an NDA if you need that, right? If sharing sensitive data. And then, like I said, it saves time, protects you legally, and makes you look professional. So always have contracts in play, right? Never do handshake business. Always have contracts in play when it comes down to it. Another thing, for communication tools, right? You got to understand, in this space, fast communication leads to more closed deals, right? Sales is all about speed, right? If somebody applies, you can call them within the next 5 minutes and get them on a call, collect what you need, submit them. You're going to get that lead, right? Because if somebody's applying on your business website, they're probably applying on 5 other ones, right? So you want to get to that lead as soon as possible. So speed is the name of this game when it comes down to it, right? Essentials for communication is a business phone number, and text. You can use your CRM for that, so nothing big there, or Ring Central. Video calls is more so for team meetings. I do it a lot through the week with my team, Zoom or Google Meet. And then team chat, right? If you have a sales team or you have a pretty big team, I recommend Slack. That's what I use for my team, or WhatsApp for quick check-ins. And use one central hub, like I say, your CRM, so all client conversations are in one place, right? You want to be able to pull up that client's data if you're looking at it, or a team member is looking at it, and be able to see all the history that client has had with you, and communication with any reps that you have working for you, right? So application systems, you need a secure way to collect client documents. Let's say bank statements, IDs, different things like that. There's a couple different platforms you can use to collect this stuff to where their information is private, right? You can use e-signature tools like DocuSign, PandaDoc, or even Scale8. The CRM has it. Or you can use a secure file upload portal like Dropbox, Google Drive, or directly inside your CRM like a Scale8, Salesforce, Go High Level, whatever the case may be. Just make it simple and seamless for your clients. Remember, the quicker you talk to your clients, and the easier you make the process of getting them funded, the more deals you will fund, because it's less friction. So just understand, you want everything to be very smooth, simple, and fast, right? So as we continue to go on to marketing, right, there's typically 4 ways to market in this business, and really any business, right? You have organic, you have affiliates, you have outreach, right? And we have paid. And we're going to break down each one of these ways that you guys can start marketing to start getting business, right? So starting with organic is basically you want to post content types that build authority. Organic is one of the best ways to market that people overlook. The reason why is organic, unless you have a following already, it's very slow. You don't get much traction in the beginning, right? But over time, it's an infinite return, because if you post something for free and it brings you a deal 6 months later, then it's priceless, right? So organic is a slower game, but something that I recommend everybody to do, because over time it continues to compound and starts to bring you in lead that you didn't have to pay to actually get, right? So organic will be posting content, right? Basically free, and it's one to many, meaning that you post a reel, you post a flyer, and it reaches however many followers on whatever platform you're on, right? So content types that build authority to get people to start really looking at you when it comes to funding and becoming a funding resource is educational posts, right? You want to teach simple funding tips, credit hacks, lender insights, storytelling. You want to share client success stories or your own journey. The reason why that's going to be very, very important, a lot of times, especially if you're a solo broker or personal branding your company, people buy into you and not always just a service sometimes. So doing that can take you to the next level. Behind the scenes, show the process of helping the client get funded, right? Show the back end of what it looks like taking the client from having no funding to 50K in funding, to be able to create belief in other people's in your service, right? Motivational content, which inspires trust and credibility. Always position yourself as the funding expert that people go to for answers, right? Why is that? When somebody thinks of funding, when somebody thinks of business capital, working capital, you want them to think of you so that you can get that deal, right? Platform selection and optimization, right? You want to start where your audience typically hangs out the most. I kind of talked about that a little bit earlier, and I'll go into detail here. Instagram and TikTok, they are fast reach with short form videos. I've gotten a lot of leads off of Instagram, not so much TikTok, right? Serious leads, I would say. YouTube is very, very good long form content that builds deep trust and authority. Some of the best leads come from YouTube. LinkedIn as well, great for B2B credibility, and business owners get a lot of great leads from LinkedIn as well. You want to optimize your profile with a professional photo, a clear bio of what it is that you do, how you help people, and a strong call to action, right? So to give you guys an example, if I say, hey, my name is Stephen Waiters, we funded over $40 million in small and medium-sized businesses. Book your free funding call today. And then I will have a link to actually my funding website to where they can book a call today to see if they qualify for funding. So something as simple as that can really help set you up, because when people come to these profiles, they want to know exactly what you do. They don't want to go down your profile to figure out what you do. It should be as clear as day. So when they know that they need that service, you can be the person there for them, right? As you continue to go on, when it comes down to organic, we want to be consistent. The thing that stops a lot of people from seeing a lot of success in organic is they stop posting because, like I mentioned, it's not a immediate return on investment, right? You're going to be posting for some months if you're starting from zero and maybe get no traction, but over time you start to build that audience, build yourself as an authority, and then you get that traction, right? So typically I recommend posting 3 to 5 times per week minimum. It can be a mix of videos, posts, stories, whatever you choose, whatever's comfortable for you, right? Stick to a content engine. So rotating different formats that we talked about so you don't run out of ideas. Consistency is going to be one of the biggest things in this space, right? Remember, algorithm trust and the audience trust, right? If you post consistently on platforms, the algorithm is going to start to push your stuff more and more and more, which allows a wider audience to see your stuff. And what happens is the algorithm is going to target people that actually show interest in the stuff that you're posting, which leads to more people coming in and inquiring about funding and different things like that, right? When it comes to ROI expectations and timelines, it's something just general, but some you guys can follow. When it comes to short term, the first 3 months, I would say 0 to 3 months, you're building awareness. People start recognizing your name, but you won't get much traction then, right? Midterm, I would say if you've been consistent for 3 to 6 months, you'll start to see some leads trickle in. Maybe your first client off of just content, right? Which is great because it's all free. Long term, let's say 6 to 12 months of being consistent, you start to compound and see that growth. Inbound DMs start coming in, people start applying just off going to your page, and you start to get a steady flow of calls, right? And then organic, like I mentioned, is always going to be slower than paid ads, but higher trust at a lower cost. Remember, it takes nothing to make content as long as you have a cell phone, or you can get somebody to make you a flyer, whatever the case may be. And when you do secure leads, these leads are the best, right? So just want to go over organic before we go through the other options of marketing as well. So now we want to go over to affiliates, right? Affiliates are honestly one of my favorite ways to get secure clients because it's trust already built up, right? If somebody is referring your business over, if they trust the person that's referring them, they're going to hold your business to that same respect. So trust is already built. It's not like a cold audience where they don't know who the heck you are, right? So when it comes to affiliates, the type of professionals you want to partner with, I would say are CPAs and accountants, right? Already trusted by business owners. So if you come across a CPA and they have a book of business and those people need capital, you can be that resource for them, right? Business coaches and consultants. If you come across business coaches that teach people how to get into real estate, how to start the e-com business, a lot of these people need access to capital, and they can refer you that business over to be able to get going, right? Their clients often need funding to implement the strategies being taught. So that's a great one. Real estate agents and brokers, right? Clients buying commercial properties or scaling their business may need capital. Another game changer that a lot of people leave on the table and has sent us a bunch of deals is credit repair specialists. When you're dealing with credit repair specialists, it doesn't matter if it's alternative lending or traditional lending, right? Credit repair specialists are in the process of fixing someone's credit, right? They can be working with business owners that already have established businesses that are making revenue, but their credit's not there yet. You can fund them right away. Or they can be in the process of fixing or have fixed somebody's credit and can send you that person once their credit's in the right position, right? So that's a great way to secure more deals. And then bankers and loan officers, right? Remember, in the alternative lending space, our jargon is typically when banks say no, we still say yes. So these bankers, they have a ton of clients that literally they cannot help because of their credit score. Remember, traditional banks work off a credit box. And if you're in the alternative lending space, they can refer you over those people to be able to fund them on the private money side, right? So here's the referral fee structures if you're looking to start your own affiliate program so that people can send you deals. I would say standard referral fees are around 2 to 5% of the a total funded amount paid to person referring, right? So to give you an example, if you funded somebody $100K, their referral fee will be anywhere from $2,000 to $5,000 depending on what you agree upon, right? Typically, industry standard is starting people off at 2%, and you can give that same example. We fund somebody $100,000, you're going to get 2% commission of that, which would be $2,000, and that should be pretty good. The reason why, and I'll explain this, remember, that lead was free. You didn't pay for it until you funded them, right? And if you're using a 10% model, you're going to still take home $8,000. So it's a no-brainer, right? Always use a simple referral agreement to keep professional and track payouts. And it's a win-win situation. The partner makes passive income. You close more deals that you wouldn't have had otherwise. So great model. When it comes to affiliates and building relationships, right? You want to lead with value. You want to show partners how you can help their clients, not just what's in it for you. I honestly would never talk about what's in it with you when connecting with affiliates, more so how you can help their clients and how this can benefit them with the payout, right? You want to be consistent, check in monthly, share updates, and keep them in the loop. If you're a solo entrepreneur, maybe hosting a webinar once a month, just in telling your people updates, showing them how to market, what's a qualified client. The more you educate them, the more they can send you more qualified people, right? You can create a system, a simple portal or form where partners can send referrals easily. If you're using a CRM, Scale-Ape, Salesforce, usually that's already in there, so you can use that to create a link or form and send that to them. And then you want to make them look good. Treat their clients like VIPs so they trust sending you more business. All it takes is one. I tell all my students that are in my academy, it just takes one relationship, one affiliate, and you funding their client for them to send you everybody. Literally everybody, and tell everybody else about you to send them everybody. So you always want to treat their clients the best, because remember, this is money. So now we're going to go to outreach, right? Outreach is a really, really good part of in the funding space and in the loan brokering space that a lot of us have to do when it comes down to it, right? There's two different ways to outreach to people, right? You have warm and cold outreach. So warm outreach is talking to people who already know or showed interest. So friends, referrals, webinar attendees, social media followers, they're easier to convert because trust is already halfway built. Warm outreach is essentially reaching out to people that you know of or know of you that may be interested in your services themselves or know somebody else that could be interested, right? Cold outreach is reach out to people who don't know you yet, right? And this is through cold calls, cold emails, DMs. It's a little bit harder up front, more friction up front because they don't know you, but it gives you unlimited deal flow if you're consistent at it, right? Naturally, with cold outreach, you're always going to have a lower number of people that you convert over, but it's a numbers game. It just becomes a numbers game, meaning you talk to hundreds, thousands of people a day to get the output that you're looking for when it comes down to it. Both can be very, 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 very good. I know a lot of broker shops that just do strictly cold outreach that are making money, so it's one thing that you can implement inside of your funding company as well. So here's some data sources for prospects, right? We're looking to get prospects, business directories, Google, Yelp, Yellow Pages, UCC listings, industry databases, Zoom Info, Apollo, Uplead. You can use lead gen companies. There are companies out there that will basically send you leads, right? Through age data, people that have applied for funding in the past, right? And you can cold call them. Social media platforms like LinkedIn, Instagram, Facebook groups, and local networking, which is really, really good. It takes a little bit more time, but the return on this is really, really good. Connecting with your Chamber of Commerce, trade associations, and even Eventbrite to find local networking events near you, right? When it comes to targeting criteria, right? Understand, just give you guys a reminder, traditional lending is going to be more so credit based. So they will need to have a 700 plus credit score, no minimal revenue required. This is best for startups or individuals with strong credit, right? Alternative lending is going to be more so revenue based. They can have a 500 credit score, as low as a 500 credit score. They need to be making the minimum, I would say, about $8,000 a month in business monthly revenue, right? The lowest will be $5,000, but you're not going to make much on an offer all $5,000. So I say about $8,000, right? Minimum time in business is 6 months, and this is best for more established business owners, especially if they have a cash flowing business but not great credit, right? So as you continue to go on when it comes to outreach, here's some methods and tools you guys can implement and start using right now, right? If you're going to be doing cold calls and texts, you can use dialers like Wave, Sales Message, or Twilio when it comes to text blasting. Depending on what kind of CRM you have, you may or may not want to do it through your CRM. Email campaigns, you can use a CRM. You can use your CRM for that, or tools like Instantly or Active Campaign to get that done. Social media DMs, Instagram, LinkedIn, Facebook, you can hire a virtual assistant to just mass DM people to try to get leads inbound, right? And then content outreach, you can use that to attract warm leads through consistent posts and free webinars, right? Remember when you're posting organically, you want to add value that we talked about to be able to get people to come inbound, right? You want to solve people's problems. You got to understand this. By you telling somebody what to do to solve their problem, they're still not going to do it 9 times out of 10. They just want to know that you know what you're doing. They're still going to come to you. So always lead with value when it comes to posting and giving people content. Don't just sell with every post, because then people start to just ignore you, right? So as you continue to go on the paid traffic, right? Paid traffic is one of my favorite topics. What is paid traffic? Like, what is it really, right? Instead of waiting for leads to find you, you pay to put your message in front of them, right? So paid traffic, it only guarantees attention, right? A lot of people, when they look at ads, they think that if they just spend money on ads, they're going to make money. And it doesn't always work that way. Paid traffic just guarantees that you're getting attention. Your offer, your service, your funnel, wherever you're redirecting that traffic, needs to do a good job of converting that person into a lead, into a client, or at least a book call when it comes down to it, right? Think of it as renting attention, fast, predictable, and scalable, right? Paid traffic, it is the fastest way to control lead flow and scale, because once you start to collect data, let's say you get 30, 60 days worth of data of, like, CPLs and different things like that, you're able to see, okay, our CAC, right? Cost to acquire a client. You'll be able to see, okay, my CAC is $300, right? For every $300 we spend, we get a client that pays us $10,000, right? Now, all you need to do is reverse engineer that and be able to spend more to get more of those clients that pay you $10,000, if that makes sense. So those are things that you can use. When it comes to paid traffic, it's not always just ads. That's just one thing that you can use. It's shout out pages, sponsorships, and podcasts as well. Those are all ways of paid traffic, basically paying to get in front of an audience that values your offer, right? When it comes to best platforms for funding, like when you're doing paid traffic, I do like Meta ads, so Facebook and Instagram. Best for volume, grabbing attention. You can use hooks, free workshop, testimonials to grab people to get them into it, right? I like Google a lot. Google is like one of my main avenues when it comes down to it. High intent leads actively searching for business loans or startup funding. These convert really, really good. With Meta, you're kind of popping up on people that the algorithm thinks they may be interested in. With Google, they're searching these keywords, which shows intent, right? So they're a little bit more serious about securing funding. YouTube ads can help with building authority and long form education. You can pair with a free webinar, a lead magnet to be able to get converting clients, and LinkedIn as well. It's a little bit pricier, but they're great for B2B targeting industries like restaurants, retail, trucking, whatever it may be, right? When it comes down to it, you want to have a funnel set up, right? Or a landing page, right? So you want to go from running paid ads to a lead magnet, which can be a webinar, an ebook, or free training. Basically, you're running an ad saying, hey, check out our free business funding checklist, or whatever the case may be. From there, you can lead them to a VSL or your website to where they can actually book a call or apply. Or even when you get their information, let's say name, phone number, email, you can then put them through a nurture campaign where you send them emails of testimonies, where you send them text. Don't spam them, but send them texts of, hey, if you're ever in the market for funding, we offer this, and then that can lead to a book call later on, or even a referral, right? Never run ads directly to an application if you're targeting a cold market. You want to give value first, right? Cold market, people that are unfamiliar with you sometimes need warming up unless they already have strong intent to get funding. That's why I like Google ads, because if they're searching it, they have intent, they're going to apply right away, right? If you're using Meta, you can use retargeting ads to retarget warm traffic to actually book a call if they're interested in funding. And then you can layer in testimonials, case studies to increase trust every stage of the way, which makes people more and more likely to be able to want to book a call. Understand with ads, it takes people usually about 6 or 7 times before they take action, right? People usually don't see your ad the first time and take action, but it continues to show over and over and over again. And then they finally take action to book the call if they're qualified, right? So tools you need when running paid ads is Ad Manager, which is just on Meta. You don't have to buy anything. These are just on those platforms. Meta Ads Manager, Google Ads, YouTube Ads, right? A landing page is going to be very, very important, because that's going to be where people can book calls. So if you have Scale 8, that's a CRM, it comes in that. Go High Level, ClickFunnels, System.io, even Salesforce as well. Tracking and attribution, right? So Facebook Pixels, you want to install that if you're running ads on Meta, because the pixel basically looks and evaluates the people that actually can book a call and tries to find more of those people, right? If you don't have a pixel, you're kind of just shooting in the dark. So you want to make sure you have a pixel, so it continues to get smarter and smarter and smarter to bring you more of the ideal clients and leads you're looking for, right? Google Analytics, if you're running Google Ads, Hyros, once you're scaling past 30K a month, and I would say with ads, get Hyros, because it helps you to track even better so that you can predict scaling and know when to spend more. Creative tools can be made on Canva, CapCut, or even Premiere Pro for video ads, right? Pro tips, you want to start small when running ads, right? I would say $20 to $50 a day. maybe test 3 to 5 creatives. Once you find some winning creatives that have gotten you some leads, some opt-ins, different things like that, you want to double down on the winners and cut the losers, right? And then once you actually fund some deals from people that come from ads, you want to create a lookalike audience. Basically, you're going to take that existing client's database. Let's say you get 100 people funded or 300 people funded, or they opt in, they're at least interested in your service. You can take their information, which is their name, email, and phone number. You can convert into a CSV file, and you can go to Meta and say, hey, create and target a lookalike audience based on these people. Basically, what you're telling Meta is, these are the people that were interested in my offer that qualified. I want you to find me more of people just like this. And what happens is Meta go ahead and create their lookalike audience and find you more people that are likely to come over, right? And then target anyone who watches your page, right? Watches over 50% of your video if you have a VSL, or attends your free training. If somebody shows up to a training, like on a Saturday, Sunday, or whenever, they probably are some way interested, right? If somebody watches 50% of your VSL, right, they're probably in some way, shape, or form interested in what you have to say. So those are people that can, potentially be clients, and that's why you need to retarget them with ads as well. So fulfillment, right? A lot of us may say, okay, cool, you taught me marketing, how to start my business. How do I fulfill? How do I get these people funding? We're going to break this down, right? So like I mentioned, traditional lending is typically for those with good credit and no revenue. If they have revenue, that can be a bonus, but it's not necessarily needed if the credit profile is there, right? With fulfillment, you want to go through the client qualification process. You want to check their FICO credit score, just to make sure it's 700 plus. You want to verify no recent major negatives, no bankruptcies, late payments, charge-offs, or collections, because that would tremendously stop them from getting the funding that they're looking for. And you want to ensure their personal credit cards aren't maxed out, right? High utilization is one of the top things that will get somebody denied quick as possible, right? So you want to make sure they don't have high utilization on their cards. So here are the credit factors before I actually show you an ideal credit profile. When it comes to your FICO score, this is what your FICO score is made up of, right? 35% makes up payment history. So if somebody has 1 or 2 recent late payments, it can literally knock them down 30, 40 points. So we want to make sure that payment history is very good. 30% makes up utilization. Utilization is the amount owed on their existing credit cards. Ideally, we want them to have around, I would say, 35% low utilization. 15% is credit age, right? How long, the credit age is. 10% is credit mix, and the last 10% is credit inquiry. So these are the credit factors that make up a credit report, right? Now I'm going to actually show you what a credit profile is made up of and ideally what you want, right? So this is for traditional lending, not alternative lending. For traditional lending, payment history, you want it to honestly be flawless. No late payments in the last 6 to 12 months. We have funded people with 1 late payment within then, but excessive late payments is going to cause that person to get denied, right? Utilization, I would say it needs to be 35% or lower. A lot of people say 10%, but being in this space, I would say 35% or lower is like industry average. So you should be good as long as utilization is around there. No negatives. Negatives will severely impact, funding amounts. Credit age, I say 2 years or more, but it doesn't ideally have to be that. Amount of accounts, I would say 5 minimum accounts. And the best thing I can give you guys is comparables, which is having existing cards or existing credit products, because that's what underwriters look at when they pull your credit, right? So I would say I recommend 2 cards that are $2,500 limits or more, and inquiries 3 or less in the last 6 months, right? So if somebody has a profile like this, you probably can get them a decent amount of funding when it comes down to it. The thing about traditional lending is everybody's profile different. So the better you get at understanding credit, the more likely you are to fund more people and have success in the traditional lending space, right? So as you continue to go on, you wanted the application sequence you want to run, right? So when you find these clients, you qualify them, you get them under contract, now it's time to fund them, right? You may be like, okay, well, where the heck do I go? Like, what banks do I go to? That's where the credit information comes in, by understanding data points of what banks are looking for and how you can put your clients in the best position. So you want to first apply in strategic orders. I usually apply for national banks, regional banks, and then credit unions last, right? So you want to apply in strategic order. You want to always go with SOP pool pre-approvals first to minimize inquiries. There are banks like Chase, American Express that will allow you to apply and let you know upfront if you're approved before actually pulling that person's credit. Those are places we want to apply first, right? To be able to see if they're approved without impacting their credit. That way, if we get them approved for $10K, we know for sure, okay, they got an inquiry, but they got $10K and you just made $1,000 in commission. And then you want to create your credit card stacking sequence and do it in a short amount of time, right? I would say a day or so if you can, right? Some funding resources you guys can use to build a funding sequence will be Bank Branch Locator. It can help you to find banks near your client's region, right? iBank.net, and then Credit Boards. Credit Boards is a good one as well because it gives you data points on people that have recently applied and if they were approved or not, right? So as you continue to go on, fulfillment for alternative lending, right? These are for people that, may not have the best credit but have revenue. If they have great credit, sometimes people take these products, but a lot of times they don't as well. So it just depends. And like I mentioned, with alternative lending, it's more of a sales aspect to it. It's more fast paced, right? So with alternative lending, client qualification criteria, I would say 500 plus. Remember, credit's not the main factor, depending on the product you're going for, right? Minimum of 8K in monthly business revenue, right? 4 months of business bank statements. And needs to be business bank statements, like from an actual bank as well. I want to understand that, right? I'm gonna clarify that. You want to get 4 months of business bank statements from them. Cannot be personal statements. Has to be business bank statements. That's one. And then the bank statements must come from an actual bank, not fintech companies. So FDIC, assured banks, credit unions, whatever the case may be. Those are the type of bank statements that lenders are accepting. When you use fintech companies like maybe a Blue Vine business bank account, those are not really accepted as much, right? So just make sure you understand when collecting statements and qualifying people that they fit under these boxes. Next, you want to go to the lender submission process. So we want to collect the last 4 months of business bank statements like I talked about. We want to send them a business application as well, a one-pager, collect their information. Then we want to submit to multiple revenue-based lenders based on criteria. Understand that all funders, revenue-based funders, are not built the same. They all like a certain type of industry, a certain type of file, and they all have a minimum, I would say, revenue requirement, right? So you want to make sure that you signed up with these lenders, and on top of that, you're sending the right type of files to the right type of lenders so that you can get the approvals you're looking for. It doesn't impact the client's credit, so it's not like traditional lending where they're getting hard pulls. There will be no impact to their credit to get an offer back, right? And then you want to negotiate the best approval terms for your client. Not really negotiate, but what's going to come back is you're going to get an offer on the term, the amount of points, the factor rate, the rate, right? And what you can do is you can kind of figure out where you want to pitch it at, how you want to pitch it to the client. And then the funding timeline expectation. Approvals can be done in hours depending on the time of day, and funding can be as soon as 24 or 48 hours after your approval. Once you collect everything you need, all the steps to get back to the lender if they say yes to the funding, right? So commission structure while alternative lending goes is this: you can earn up to 6 to 15 points per deal on the amount funded. That is going to be based on what you close the deal at. So remember, in alternative lending, I told you it is a sales-based, sales-driven environment, meaning that you can earn up to 15%, but you're going to be selling that funding at the highest rate, which is going to have the client or the merchant, which we refer to as paying the most, right? So depending on where you want to sell it at, right, depends on how much money you can make, so you can control how much money you want to make depending on where you sell the rate at, right? Renewals happen once a merchant is 45% paid in. So once a client is 45% paid in on their existing, product, that's when, they'll be able to be eligible for a renewal depending on their revenue and everything at that time, right? Understand when you do these things, your client lifetime value grows with every renewal. Understand that. Meaning if you close a deal and you made $2,000 in commission, if you renew them and then you get another $1,500 in commission, right? Now you're at $3,500 in total commission, and it continues to grow every time they renew, and you can continue to build your book of business like that. Imagine having 100 people a year you renew, right? It's like passive money. It's easy money. You guys can do the exact same thing. So here's some advanced funding strategies that I want to cover with you guys, right? You want to understand credit relationships deposits when it comes to traditional lending. This is the recipe for success. CRD, this is literally what I teach my community, right? When it comes down to getting people high limit approvals, they got to have the credit profile, right, which we covered. It will be ideal they have a relationship with that bank, right? And then deposits, right? It can be an initial deposit, or it can be consistent overall depository history that leads to those high limit 50K approvals from Chase, 25, 30K approvals from Wells Fargo, different things like that as well, right? So bank ratings, I'm going to cover bank ratings. A lot of people don't know that banks actually rate you based on the amount of money that you actually have in the account with them, right? So here's what bank ratings look like. And based on your bank rating, right, you look more favorable to the bank when applying for funding. So typically what I tell people is you want to be in this low 5. I know that's $10,000. That may not be ideal for everybody, but the low 5 is ideal to where you're set higher than the rest, right? Most people don't have $10,000 in their account. So if you can do that, and that can really set you apart. Where I see most people at most of the time is a low 4 or moderate 4, right? That can still be good to get you the amount of funding. But if you want to set yourself apart from the competition to help your approval odds and the amount of funding they give you, that low 5 would be ideal to be able to get that done when it comes down to it, right? So NAICS code. When you're going to open a bank account or apply for funding with a traditional bank, they're typically going to ask more about your business as far as like what type of industry, what do you do, different things like that. When they're asking you that stuff, they're classifying your business and its risk level, right? So a NAICS code is basically your business description. And what happens is this. If you're in a high-risk industry, naturally that bank is going to approve you for less because your industry is high risk, to decrease default rates and risk mitigation, right? So it's going to be very important that you choose the right NAICS code for your industry, the right NAICS code to maximize funding when it comes down to traditional lending, right? And if you want to speed up the funding process, right? If you want to speed up the funding process or maximize funding, if you're somebody that has a young business, let's say a couple months old, if you want to maximize funding, shell corporations can help you get that done. With a shell corporation, it is an aged business that allows you to skip the line and maximize funding. It can be the difference in you getting $30K in funding compared to $100K in funding just by having an aged business, right? Understand that you typically unlock the maximum amount of funding you can get from a bank once you're at least 2 years time in business, right? When you're less than that, to banks, you don't look like you stood the test of time. You don't look experienced, so they tend to lend you less, right? When it comes down to it. But if you want to maximize the amount of funding, you want to get a shell corporation, which obviously we sell if anybody's interested in those, to be able to maximize how much funding you can get, to be able to go and do whatever it is you need to do. Shell corporations are more fundable. They come with age, and banks lend more to older businesses. It's the same thing as going to a barbershop for my fellas, right? Are we going to the dude that just started cutting 2 weeks ago? Or are we going to the OG in the back that's been cutting for 10 years? A lot of us are going to go to the more experienced person, and that's the same way that banks look. They want to see your time in business, how experienced you are, and that's all a part of the underwriting process to see how much they lend to you based on, obviously credit, comparables, banking history, and then time in business industry as well. So those are all things to really look at. But like I said, shell corporations for somebody that has a young business can definitely help you. Or if you're in a high risk industry and you don't have much revenue, like trucking, like real estate, shell corporations usually are in low risk industries, which allow you to maximize funding as well. So it can be a great thing. You guys can do a bunch of research on them, right? So an affiliate of ours used a shell corporation to secure $90,000 and 0% interest from Chase alone. As you guys see here through our WhatsApp group, right? He was able to go with my team, purchase a shell corporation, and literally got his client $90,000 and 0% interest for 12 months. Imagine what $90,000, literally $90,000 and 0% interest for a year can do for your business. Imagine. Not just us as business loan brokers, but just our clients as well. And that's why this is pivotal. This is important. And this was another broker that bought the shell corporation for me and sold to his client. He upsold to his client, got paid us for the shell corp. Obviously, he profited whatever he made in the middle, and then he was able to use that shell corp to fund his client and ended up making $9,000 in commission off getting this person $90,000 and 0% interest. So if you're in the broker space, adding shell corporations can definitely help, right? Or if you're looking to fund yourself, it can also be beneficial to you as well. You do need to have good credit to leverage shell corporations. I will say that. You're not going to go anywhere with just bad credit and getting a shell corporation. A shell corporation is only beneficial if you have good credit to go with it. So as you continue to go on, if you're somebody that's looking to maximize funding, not just from a standpoint of like, let's say you're tapped out the banks near you. Let's say you're in Florida, right? And you used every bank you can think of, right? You can never run out of banks with traditional lending. And I say this because a lot of people think, oh, I've been in that bank, I've been in this bank. You can never run out of banks. Even if you clear all the banks in your state, there are other states you can get access to funding from. So you never can run out of funding. This is called the foreign filing strategy, right? This is the method to get access to any bank you need to, right? And some banks are more generous that you may not have access to, like a Key Bank, like an M&T, like a Citizens, right? These banks are more up north, I would say. And if you're down south, you probably don't have access to these banks. But a way to get access is to do a foreign filing to take your business, your LLC, put it into that state, which now makes you eligible to get funding from those banks as well, right? So if you're looking to get funding in any state, doing a foreign filing in that state can definitely help you, and that can be done through the Secretary of State, right? So to make this very simple, you will take your LLC, your corporation. Let's say you want to go to Florida and you're in Georgia. You would go to the Florida Secretary of State and you would do what's called a foreign filing. What happens is you're able to put that business, that Georgia business, into Florida, which now makes you eligible to receive funding from any Florida banks that may only be in Florida but may not serve Georgia clients. So that's a great way to be able to get access to more banks to acquire more funding. So now we're going to go to lender relationship development. It's going to be really, really big. I taught you about funding fulfillment. But now one thing that we need to do is we need to get signed up with lenders and connect with bankers that can help us fund our clients, right? So when it comes to network building, we want to connect with bankers and lenders. Great resources to get this done is LinkedIn and Hunter.io, right? Hunter.io will give you the emails and information of a bunch of lenders and bankers that you can message directly. LinkedIn is a great way to connect and build relationships and send your leads through there, right? Application strategies by bureau, right? Apply strategically based on which credit bureau a bank pulls from. So you want to understand when funding your clients, what bureau they're pulling from, right? Because what you don't want to do is stack too many inquiries on one bureau, or you may have a client that their Equifax may be low, but their Experian and TransUnion is high. So you want to find banks that only pull from Experian and TransUnion and not Equifax. And then you want to understand banking rules and limits, right? Every bank has underwriter rules, right? The number of cards you can get, inquiry limits. Knowing them helps you maximize approvals when it comes down to it, and it's a game changer, right? So here are a few banking rules that I'm going to explain to you guys. Like I mentioned, FNBO, right? They'll approve you for one personal credit card or one business credit card. Capital One, they will approve you for 2 cards every 6 months, obviously assuming that you meet the data points as far as credit. Chase has a 524 rule, right? That's very, very important on the personal side with Chase, right? With Chase's 524 rule, if you have more than 5 new personal cards in the last 2 years, they will auto decline you for anything else. So you want to make sure that you understand that measurement, right? Barclays, you can get approved for 1 credit card every day. Bank of America, you can get 2 credit cards every 2 months, 3 credit cards every 12 months, and 4 credit cards every 24 months. And then American Express, nowadays, it used to be you can get 6 credit cards. Those days have gone. You're typically at about 2 charge cards and 2 credit cards every 90 days. So these are some banking rules which can help you when it comes to traditional lending to build strategies to maximize approvals for your clients, right? And scaling your funding business. A lot of you may have already be making 20, 30, 40, 50, 100K a month. You're like wondering, okay, well, how can I take this to the next level? And I want to ask you these things. Right? I follow this with my students, and this is literally how we dissect and how we implement what strategy works best for them to grow their business, right? 1, you can do more. A lot of you guys are having success. You're making 10, 20K a month, and you're wondering, how can you get to 40, 50K? Just do more of what's already working. What entrepreneurs do is this. They make money, they have success, and they want to try something else. No, just double down on what's already working. So if you're running pay ads and pay ads got you to your first 20K month, spend more money to get more clients, right? If you're doing cold outreach, right? If you have a whole DM setter team, you're doing cold outreach and you got 2 setters and they're DMing 100 people. All right, cool. Hire 2 more setters. Now DM 200 people, right? Just do more of what's already working, right? That's the easiest way to increase revenue and to be successful, right? Another thing you can do if you're in the funding business, right, and you're just strictly offering funding, offer more, right? If you're only doing credit card stacking, offer revenue-based lending, right? If you're offering revenue-based lending and credit card stacking, offer credit repair. Offering more, all of these services kind of go hand in hand, can naturally help you to make more money. And the way we structure our funding company, the way we do things is like this. We have traditional lending for those that have no revenue, but a good credit profile. And then we have alternative lending for those that have, let's say, not so great credit, but a cash flowing business. If somebody comes to us and they have no revenue, right, and no credit, like bad credit, then we downsell them to credit repair so that we still can cash collect and make money. So adding more services that make sense or partnering up with a company that offers that service can help you to make more business, right? Another thing, if you're not already doing it, you want to track your metrics, right? You want to be able to track your metrics, especially if you're running paid ads, so that you can see where your traffic's coming from. How's revenue? How much are you spending on ads to be able to make, I would say, knowledgeable decisions on your business, right? When you have data in front of you, you're able to think better as an entrepreneur and lead your business in the right direction. Next thing to think of is the model, right? Some of us are running different type of funding models. Some of us are running the back end method with 10% performance based, meaning that we get somebody funded and we charge them a 10% commission at the end, right? That slows down cash flow, because if you're getting somebody funded, let's say it takes 2 to 3 weeks, you're not getting paid for 2 or 3 weeks, especially if you're running ads, you're going to be in the negatives. So what you can do up front is change the model, maybe charge a little bit up front or get a commitment fee up front, or you can charge an application fee, right? The application fee can be $500 to $1,000, whatever you want it to be. It shows commitment, and you can throw that $500 or $1,000 back into ads instead of starting at zero and waiting 2 weeks to get paid out once they get the funding they need, right? Money, some of you may need funding to grow your business. If you're only using your own capital to grow your business, you're always going to be slower to get things done. You want to get funding for yourself, business credit cards, whatever the case may be, to be able to grow your business, to get into ads and do different things, or even get a mentor that can help you make the right decisions, right? Or manpower, right? A lot of us understand marketing, right? We understand marketing. We do a great job at fulfillment, but we're just slow. We're just slow to reaching clients because we're just a one-man team or a two-man team. You need to hire people, right? Whether that's American sales reps or virtual assistants, you may need to hire people so that you can fulfill and do more, or even in marketing, like I talked about earlier with outreach. If you have 2 setters or 2 people doing cold outreach, why not add 3 or 4 people to bring in more money? So all these things are very important when it comes down to scaling your business. And this is kind of what we look at when we're going into helping people to get to where they want to based on their goals. One thing that I realized early on, from anywhere from $0 to $1 million in revenue, the biggest components that you need to focus on is marketing and sales. Honestly, those are the biggest things that you guys want to like hyper focus on if you're in that $0 to $1 million in revenue, right? It's typically those things, right? You understand, you become great at marketing to get a bunch of leads, and you get great at sales so you can close those leads. If you can master those 2 components, you can build $1 million business, just being very honest, by focusing on those 2 things. You don't have to have any of the other stuff and be perfect at it. But if you're great at marketing and sales, you're going to make money and you can build a profitable business, right? So as we go into it, right, add-on opportunities, revenue add-on opportunities. I kind of talked about it earlier. Additional service that you can add on to the funding business to make more money naturally. Could be credit repair, business credit building, trade lines, shell corporations, bookkeeping services, or even credit monitoring services, right? These are all ways to build more income, bring more revenue to the business so that you continue to make more money. And some of this stuff can be liquidator offers, right? What I mean by liquidator offers, if you're running ads, right, and somebody comes to you and, you know, it takes 2 weeks to fulfill, so it takes you 2 weeks before you get paid from them, you offering them another service like bookkeeping services, like credit monitoring, a shell corporation, these add-ons, that can help you get more money to put back in ads. That can help you get more money to put back in the payroll, and you don't have to wait till services are rendered to actually get paid, right? You got some passive income development things that you can do. Little mini courses, different things like that to help people out, low ticket type of stuff, template, digital products, ebooks, or even DIY services, right? DIY services can help somebody that can't afford your services or may quote unquote not want you to do it, but you can sell them something to where they can implement it themselves and still make some type of money, right? And then really the referral program can really help as well, because remember with these referral programs, they're essentially free leads in the beginning. Like, you don't pay for the lead until you get the person funded, and then it's based on how much you get them funded. So expanding to that can really be a game changer when it comes down to really scaling your business. A lot of you may ask when to hire. Like, yo, Stead, I've been in business for X amount, I'm making this, I'm doing it by myself. When do you think I should hire? Typically, I tell people once they're at 10K a month, they can probably look at hiring somebody. But honestly, the real response to that is honestly when you feel choked. When you feel stressed and you know you can't do more, not when you feel uncomfortable, but when you know like you cannot do more, that's when you want to hire, right? That's when you want to hire, because you know like you have a workflow for that person. You have lead flow for that person. You don't want to hire with no lead flow because then that person's just going to leave. So you want to hire when you know, like, okay, I'm very stressed, I'm choked, it's overwhelming. I need to get somebody to help me with these calls, right? Key roles and responsibilities. You can get a setter or opener. These are people that book calls or warm up leads, or anybody that applies on your business funding page. They can be the person that calls them within the next 5 minutes to qualify them, right? You can have a closer that basically closes deals, a sales rep that work with them through the whole deal, an underwriter, funding coordinator, right? Handles paperwork, follow-ups, and then a client success manager, which is more so seen in the credit card stacking industry, right? Which ensures long-term results and just make sure that the client has somebody they can reach out to if they have any questions, right? Training and management systems, obviously creating SOPs, standardized operating procedures for every task, weekly check-in, KPI dashboards to make sure people are closing and keeping their close rate fairly decent. Once you train, let the system run, right? So as you're building this out, document your process so it makes it easier for when you hire somebody for them to pick up quicker on how you want things done. When it comes to brand development and authority building, there's a couple of things you want to do. If you're somebody that's personal branding your funding company, you're in front of the camera, you're talking about it, these things can really help you, right? Personal brand positioning, you want to share your story, why you started, who you help, and wins. The reason why this is important, and I talked about it earlier, people buy into you. They don't just always buy into the service. Like if I have a service and you have the same service and somebody resonates with my story better or they like my personality, they're going to choose me over you all the time. So when you talk about your story, where you're from, the things you like, people like that type of stuff and will choose you to do business with, right? Content leveraging strategies. So like I talked about earlier, YouTube, Instagram Reels, LinkedIn posts, these attract clients. And it doesn't always have to be business. It can be you at a baseball game. It can be you eating your favorite food. It can be you showing people that you're a regular guy. You're a regular guy, you're a regular gal that helps people get funding, right? But in your off time, you love watching baseball. You know what I mean? Stuff like that really helps. Post case studies, testimonials to build proof. And then marketing position tactics. You want to become the go-to resource for funding. I like the dual model approach, offering both traditional and alternative. Differentiate with education and always be transparent because most competitors are not. Most competitors say stuff that sound too good to be true, which is honestly not the truth. But you just clarifying like, hey, I'm going to be very transparent with you guys. This is this, and this is how we can help you. If it makes sense, book a call. A lot of people will respect you for that, right? Remember, we're dealing with business owners. A lot of them are savvy and they appreciate you for being truthful and not just selling them a dream when it comes down to it. So systems and automation, right? When it comes down to systematizing everything, you want to process and document everything that you're doing. I don't care if you're just starting, you want to create a process and an SOP because when it's time to hire somebody, they can easily follow it, right? Quality control, you can build checklists to avoid mistakes and keep deals compliant, and then creating that client journey optimization. So you want to map out how clients move from contract, application, to funding, to repeat business, because what happens once you build that cycle, it makes it easier for you to replicate that to give to your sales reps or anybody else that joins your team, right? When it comes to technology, having CRM workflows, automation reminders, text emails, so people show up to calls, or marketing, sending text blasts, email blasts, anything like that. Follow-up sequences, so setting up automatic touch points, day 1, day 2, day 7, to keep leads engaged, right? Typically, best practice that we use is if somebody applies, let's say on our funding website, we call them three times during the day. So in the morning, in the evening, and usually like right before everybody starts to clock out. We'll do that for a few days before we consider that person a disengaged lead. But you want to contact these people as if they owe you money in a way. You don't want to harass them, but you want to get in contact with them because you're dealing with a cold market, right? Reporting the analytics, you want to be able to track revenue, approval rates, and conversion rates to see what's actually working, right? Once you have data and you see what's actually working, you can make, knowledgeable decisions on where to take your business or what's the next plan of action. So these things you definitely don't want to leave out when it comes down to it, right? Look, the information in this free course genuinely has the power to completely change your financial situation and create massive impact helping business owners access capital. At this point, you have two options. You can do it yourself, knowing all the problems you will face, and I wish you the best of luck, or work with me to help build your funding business. If we're being completely honest, if you're not already earning $20K or more a month with business funding, you need help. That's why I want you to click the first link in the description to sign up for my free funding workshop where I give away literally everything. This is for you if you want to avoid doing all the work yourself and you want me to show you the complete system, lender relationships, contracts, SOPs, and live deal breakdowns where I walk you through exactly how I close deals in real time. You'll get access to the same strategies and connections my 7-figure funding company uses, plus my personal lender network that I built over the past 4 years. So if that's you, click the link, sign up for the free funding workshop, and I'll see you there. Make sure to like this video so you can easily find it again. Subscribe to the channel for more business funding content, and I'll see you in the next one. Peace.